Hello, everybody. Monday saw a resumption of the selling that we saw on Friday. Volume was very large on the Russell 2000 and the NASDAQ. However, on the New York Stock Exchange, it was below average. So that is something to consider about today's selling. Also, another thing, it's not like I got full sells everywhere in all of my holdings. A lot of them held up, so that must be taken into consideration too. However, the intraday action was nothing but negative. A continued follow through on the biotech selling off. Solar stocks followed through just slightly, but the intraday reversal in both the solar stocks and biotech stocks has me, it's not really hope. I could care less, first off, one way or the other, but has me hoping that maybe we can find some lows around here and then rally higher. If that happens, great. Hopefully new biotech long signals will come along. If not, that's kind of what I expect, because despite the intraday reversal in the biotechs and solar stocks, the damage was done. Same thing with the market. Volume was huge, and there's a lot more cracks underneath my individual stock scan. But still, right now, overall, who the hell knows which way we really want to go with intraday tail off the lows of today's session. The market is still trending above the 50-day moving average on every single major market index. The NASDAQ at one point was below the 50-day moving average, and had we closed below the 50-day moving average, which it definitely looked like we were going to do before the end of the day, we would be under a new sell signal. If we close under the 50-day moving average tomorrow, we are under a new sell signal in our overall stock market. And even if we don't go under a sell signal and do rally back, I want to remind everyone the one thing historically since the SEC was created in 1933 that you never want to do is fight the Fed. We know for a fact rates are at as low as they're going to go. We know for a fact at some point this year, maybe next year, they're going to start hiking interest rates. We know for a fact that they're winding down quantitative easing and tapering. So no matter what, if the Fed is taking money out of the market and plans on raising rates, making it hard for investors to borrow money, that should negatively impact the market. If we're forward looking, which the market is, we might have our first cracks. Now, I want to remind everybody, ever since this stupid goddamn rally off the 2008 low started, we've had one similar thing continue to happen until 2013. We sell off on huge volume and then magically rally on low volume to new highs. How is that possible? Easy, because evidently somebody with a lot of stocks to sell is selling them. The Fed or whoever is getting the money is supporting them, and then on lower volume you can make the market go to new highs. No big deal. In 2013 we started to see the opposite happen. We started finally rally on higher volume. That's how it's supposed to go. However, this year 2014 has been in what I would consider a distribution orgy fest. This thing is insanely, every time we rally we still start to sell off on even bigger red bars. We rally again on lower green bars and sell off on big red bars. I want to show you this chart here. This is looking at 2014. Look at all the big tall red bars above this yellow line. You would normally want to see, maybe you only get a few green bars above there, and with all those green bars you'd want to see these red bars below the yellow line. So I don't think it's good that we see all this. So the market does probably, I'd say, even if we bounce here, I'm hoping we get a great pre-market gap up, because we have a lot of sells tonight, and I would like to sell some of these at better prices. EGRX, VRX, ATRC, QLYS, SGMO, VASC, ALXN, and CTIC are all full sells, and not surprising them, all of them are in the medical, biotech, healthcare related sector. So it's not good that these leading stocks are all giving me full sell signals. On top of that, CRVL is a 25% sell. Tesla is a 50. YY Inc. is 50. MZOR is 75. But, we're hang on to a little bit more of that. But you can go and sell all of that if you want to. BX is 50. Jazz is 50. GWPH is 50. Facebook is 50. INO is 50. Taro is 50. FLDM is 25. GOMO is 25. KNDI is 50. SKBI is 50. TXMD is 50. IFON is 50. Now, why aren't some of these full sells? Because they're still holding support, and like I said, How the hell do you know what the market's going to do tomorrow? Nobody can predict the future, and we could easily find support here, right here at the 50-day moving average. For all we know, those intraday lows today could have been the low of this pullback, and we're going to rally higher. I would hate to get rid of some of these positions where I still have gains in them, fully sell out of them, and watch them to move another 20-30% in my favor. I would rather be wrong here, lose a little bit more money tomorrow or the next coming days, and fully get out instead of being taken out of my position and then missing the potential gains. However, what we could be having here is a lot of chop upcoming. That's why we're going to go ahead and add to our hedge in the Russell 2000. However, it's not going to be a 10 or 20% hedge. It's just going to be another 5% position. SQQQ is right around 10%. SRTY is going to be right around 10%, with about a 20% position in SRTY and SQQQ positions with 3 times leverage. It puts us about 60% short this market. I have no idea what my cash and long level is. I was going to wait till we finally calm down and all these sells that we've had lately stop happening, because the past week we've had a ton of sells. I've probably spent at least $100 in commissions just selling stocks. Probably not $100, but I know I've spent $50 to $100 in the past week selling stocks. So big chunk of, not big, it's small. I only pay 0.01 cents per share, $1 per trade usually, so it's nothing. That's really killing me, but still it's a lot of sells. It's, again, if you don't have a ton of capital, this probably is not a methodology you want to use. Now, despite all this, we actually do have one new long signal. Not only are we adding to SRTY, but I cannot not take this. Even if it fails, once again, I would rather be proven wrong than not take this and watch this stupid thing move 20-25% in a few weeks, possibly a month time. But Star Surgical is following a gap up session on the 17th. It's pulled back for about 4 days. Each of those 4 days have been extremely tight, with very bullish intraday reversals off the lows each of those 4 days. We are now breaking out to 1759. It is not a close above the open of the gap up day, but it is a close above the close. It's not a close above the close either, 1770, but it is a close back in that price range. 1744 was the low a day. Close at 1759 makes it look like that gap up wants to hold. So we'll be going long here. You can use the low a day of today's signal as one of your final cut losses, or you can get rid of 50 to 75% of it and then let the rest go if it closes below 1633. But this is a very solid daily chart pattern, and it's even better on a 2-day chart, because you can see it's been under accumulation since April, May, June of last year. Actually, since April of last year. But pretty solid looking technical pattern overall. If it fails, whatever, that's to be expected in a neutral sell market. If you want a 100% for sure thing, I would not take this long position in the current tape that we are in. Okay, everyone, I'm going to wrap it up here. Have a great Tuesday.